Hi, I'm Scott from Solace Financial, and this is a market update from my clients, friends and family. None of the information in this video is personal advice. Please give me a call before doing anything. This month I just want to talk about the year that we've had so far. Currently our share market's down 9.2% for the year, and it's at the same level that it was right before the global pandemic back in January 2020. So the same level as it was a couple of years ago. I want to talk about some of the negative returns that we've had this year in all different types of market. And the way that I'd summarize this year is there has been nowhere to hide. This chart here shows just some selected investments, just common investments and their returns for the year. US share market is down 18%, technology stocks down 27%, same as emerging markets, China especially, 27% negative. The Australian share market, as I said, minus 9.2%. That's just for this since January this year. Gold is minus 9.1%, and that's quite disappointing, as we would think that that would do fairly well in times of crisis and war. Iron ore is down 22% for the year. Aluminium is down 16%. Global commercial property minus 16%. Australian commercial property minus 25%. And for me, one of the disappointing parts of the year, usually when we see negative returns in growth assets like shares and property, we usually see positive returns in bonds. However, the big interest rate increase this year has meant that Australian bonds are minus 14% and US government bonds are minus 12%. The only real thing that I can see that has performed positively is maybe bank accounts, bank account interest. And in January, they were paying about 0.2% in interest before any fees and before inflation. So in real terms, including inflation, pretty much everything is negative this year. So our objective this year has been to batten down the hatches, reduce risk and volatility, and paddle as hard as we can with an outflowing tide. Generally, after a big fall like this, we usually see a big rally. And the average rally out of a bear market, which is a share market with a minus 20% return in a year, the average return in the following year is 21.6%. So we are starting to look and find opportunities in the market to take advantage of any upswing and any good news that comes out. But we still expect some volatility in the next couple of months at least. That's it for next month. Hopefully next month I can have some better news in portfolio returns and investment returns. But if you've got any questions, please give me a call. Thanks very much for your time.